Plain and simple. If tech is regulated further, stocks will crash. It happens every time. Companies will move overseas. Industries will abandon their country in search of the most important factor, corporate profits. This is about to get interesting. You came here for the truth, so let me unveil that for you. I want to get into various issues today. First, let's talk about tech stocks. Equity bubbles popped by regulation. You can see in other instances how this was occurring. Look at tobacco. 1992, Supreme Court finds tobacco companies liable immediately after the stocks crash. Biotech, 2015, US tightens biotech regulation. And you can see what happened. 2018, privacy fears spark global tech regulation. If this is going to happen, I assure you, stocks will take a hit. How far they'll come down, I have no idea. But this will definitely be affecting them negatively. There's no doubt about that. And let's take a look at some historic examples. Let's talk about it for a moment. When you see previously what I just showed you, compare it to this chart. Technology and e-commerce is vastly different than manufacturing when we see US federal regulations by sector. Previously, manufacturing was booming. The US was known as a hub of good quality materials and components and everything else. Building cars, building everything. And then the sector became so regulated that it just wasn't worth it. It was becoming very expensive, despite the quality, known for good quality in general. It didn't matter. It was too damn expensive. And so, jobs got shipped overseas, and you know the story from there. But technology and e-commerce is, when you compare the two, I mean, it's 10 times less regulated than manufacturing is. And that's a big issue that we really need to look at. If it starts to creep up, people know what's going to happen. They don't want that. Investors definitely don't. All of this takes time. As time goes on, they put more and more regulations. Rarely ever do you ever see the removal of any regulations. Simply doesn't happen often because, of course, there is this bureaucracy, there is the increase in the size of government, and it goes on. Well, I want to show you something today to switch gears. This is one of the scariest charts, and it's one that it's quite simple. Velocity of M2 money stock. Essentially, we're taking a look at the velocity of money. Currency needs to have current. It needs to continue to move. It needs to continue to flow. But look at what has happened since the year 2000. The velocity of money is constantly declining. There was an uptick here, but of course, as soon as we had this whole subprime crisis, everything changed. Again, a very, very small uptick here, but it just continued on its line. It has to decline. We have to see a reduction in the velocity of money as the real economy dies. And that's what's happening. This is how we know. You can't just print your way to prosperity. You cannot print success. They're trying to do that. Every government has done it historically. But ultimately it's failure. And this right here is ultimate proof. This is a very scary chart. You have to understand the way that things work. There are two very important things. It is liquidity and velocity. Both of these things are integral to keep this fraudulent system alive. We're looking at what's going to happen now. The federal debt is primed to just take off. The CBO forecast that the new tax law will generate an average of 0.7% growth over the decade and create 1.1 million jobs. That's great, excellent. However, larger budget deficits would crowd out private investment in later years. The cumulative deficit over the next decade will be $1.6 trillion larger than previously projected. By 2028, the national debt would total 96% of GDP. It's a hell of a lot worse than that when you actually total it up for real, but anyway. Republican tax cuts in the new spending bill Congress approved last month will send the economy surging this year to 3.3% growth. Can you believe it? 3.3% growth. Wait a minute. Oh, the revised statistics. Yes, that's right. It's going to look like this every time. Same thing every time. They revise. This is their initial starting point, and they revise downward, and as the time goes on, it gets worse and worse every time. It happens literally every single time. Deficits will top $800 billion this year and will reach $1 trillion by 2020, and it's only going to get worse from that point on. Debt held by the public will stand at a staggering $29 trillion by 2028. Probably is going to be a lot worse than that. You can see that the way things move, it's not on a normal timeline. It doesn't just rise steadily. It rises, exponentially, but whatever. And then I want to switch it over here to China. So the president in China actually said something very interesting, discussed plans to further open up the Chinese economy during a Tuesday address. Those measures including lowering import tariffs for autos and other products, enforcing the legal intellectual property of foreign firms, and improving the investment environment for international companies. This annual summit, it's the Asian Davos, comes amid escalating tensions between China and the US. So you see them going back and forth. But what China is doing is saying, okay, we're having this little battle here, but we want to be open to the rest of the world, whether that's real or not. Who knows? But essentially they're saying that, and that's a good thing when we're talking about the global economy. That's a very good thing. If you're interested in stocks rising, you're interested in having the global economy continue to move, you want to see that. China is very important to the global economy, and ultimately, despite everything that they're doing, they're really just doing what every other country is doing, and that is encountering public works projects and stimulus measures and everything. They're all doing it. That's the new paradigm. It's a whole bunch of either manipulation or anything else that's existent. We should stay committed to openness, connectivity, and mutual benefits, build an open global economy, and reinforce cooperation with the G20, APEC, and other multilateral frameworks. And it goes on, trying to say that they're going to be opening up, essentially. This I thought was quite interesting. China is evaluating the potential impact of a gradual yuan depreciation. People familiar with the matter said, as the country's leaders weigh their options in a trade spat with the president that has roiled financial markets worldwide. What if they decided to devalue their currency even more? This would be a very, very interesting tool. You know that they do this. You know that all countries do this. They're all printing money. That's all they have to do. Just print up a large amount of money. And they have no problem with that whatsoever. Now, what's happening with the jobs market is not a good thing for a lot of people. You can see here, I really want to focus on the bottom area. We're talking about automation. It depends on how quickly things escalate, but look at this. Up to 33% of the 2030 workforce may need to switch occupational groups. That's when you know things have really changed. 2030, when you think about it, is just over 10 years away, just over a decade. It's not that far. How many people listening to this right now remember the financial crisis? Think about that. And already in that time frame, by 2030, we could see up to 33%. Who knows? Who knows what it'll be? Midpoint automation, 39 million people displaced. That's not even rapid. See, they show you here 73 million. 13 to 16 million changing occupations as a result of automation. I've seen so many different types of robots that are being created today that do a lot of the sort of, very simple tasks, whether it's, factory work or anything else. Look at the Amazon factory as an example. And, you're seeing they're trying to use automated cars now. They're trying to do automated delivery services, maybe drone deliveries, and who knows? All kinds of things are being developed. It's still very early, but a lot of things can happen in this time frame. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So I really do appreciate that very much. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. If you'd like to look through the books, you can do so. All you have to do is click on the link in the description of this video. It's going to bring you over to Amazon, and they have a look inside feature. That look inside feature actually gives you the ability to flip through the pages of the books to see if you like them. Take care. If you're still here, I'm going to show you one bonus article. It was about surveillance and what Mr. Modi has promoted as Digital India. They're actually doing all kinds of, you have to read the whole article for yourself. It's out of the New York Times. If individuals want their rations, look, the poor must scan their fingerprints at the ration stop to get their government allocations of rice. Retirees must do the same to get their pensions. Middle school students cannot enter the water department's annual painting contest until they submit their identification. Newborns cannot leave the hospitals until their parents sign them up. Even people with leprosy somehow have to give their fingerprints and their iris. That's what's happening to everybody in India. They have 1.3 billion people, and they're about to all get their fingerprints and their iris put into their database. And they're talking about interconnecting all of the different databases. All right? So your bank account, so imagine you're going to have your iris and your fingerprint connected in with your bank account, your credit cards, where you went to school, where you were born, your license plate, your car, where it's registered to, where you go to eat, when you go to sleep, everything. Everything's all going to be connected in one central database. Now that right there, it's called Big Brother. You might know about it. That's not good. That's not good for anybody. Now, let's say you thought, well, you know what? It's okay. I don't worry about it. I have nothing to hide. I'm fine. What happens when that information is somehow misplaced? Well, then you have a big problem. There are data breaches that occur so regularly. It's not even funny. So if you don't have to worry about Big Brother watching you, what about some other sneaky individual? Well, that's the concern. So that's all for this video. Just wanted to throw that in here at the end. It's unrelated, but hope you enjoyed it. Take care.